nation and grow the economy. The annual growth of 700 billion shillings, equivalent to roughly $5.3 billion, exceeds the World Bank's estimate of our total annual infrastructure financing requirement. The National Infrastructure Fund provides a mechanism to channel these long-term savings directly into infrastructure investments. Mobilizing domestic capital will help us solve three major challenges that arise when development depends excessively on foreign financing. The first challenge it will help us solve is the mismatch of investment horizon. Infrastructure projects are long-term assets. Whether you talk about highways, toll roads, energy, and rail, these are long-term infrastructure. They are viable. They are commercially viable, but their gestation period is longer. Look at what we did with the SGR. We took facilities of 15 years and 20 years. That is why it almost crushed us. Now we have an opportunity to, under the National Infrastructure Fund, to crowd in resources with a long-term view and make those infrastructure projects work for the people investing and for the nation, and make them commercially viable. The second issue that this will help us solve is the cost of capital. Many analysts have shown that Africa consistently pays more for capital than objective risk would justify. In infrastructure financing, the default rate in Africa is approximately 5.5%, compared to 14.5% in Latin America. But you know what? International investors typically demand returns that are about 5 percentage points higher in Africa than in Latin America. Just look at the unfairness. Our default rate is 5.5%. In Latin America, it is 14.5%. Yet, when we go to the market, we are told we are much more risky investment destination than Latin America. Where is the sense? Where is the fairness? And that is precisely what this National Infrastructure Fund is going to solve. This perception bias alone is estimated to cost the continent up to $4 billion each year in additional interest payments. Payments we shouldn't be making. If we apply Kenya's share of Africa's Eurobond exposure, roughly 8%, that perception penalty costs us approximately $320 million every year. That is 42 billion shillings every year that we are paying more than we should be paying merely because we have a perception penalty. The National Infrastructure Fund will erase that perception penalty because we will be mobilizing our resources from here. And nobody is going to tell us about a risk that does not crystallize. The third challenge is currency mismatch. When infrastructure is financed in foreign currency while the revenues are earned in Kenya shillings, exchange rate volatility introduces significant risk. This challenge has long affected many of our utilities. Many of you remember the challenges Kenya Power goes through all the time. Domestic financing helps eliminate this currency exposure. As I said, tomorrow morning, I will ring the bell to inaugurate trading of the Kenya pipeline on the Nairobi Securities Exchange. fulfilling a commitment I made 3 years ago. Kenya Pipeline Company IPO has generated 106 billion shillings that will be used to capitalize the National Infrastructure Fund. Our goal is to leverage this capital at least 12 times, mobilizing up to 1.2 trillion shillings for infrastructure investment. Over time, this model will enable Kenya to mobilize close to 5 trillion shillings in infrastructure investments over the next decade. And that is why all of us are talking about over the next generation. Previously, this asset would have provided the National Treasury with a dividend of about 5 billion shillings annually. That's exactly what John Mbadi was saying. This asset of Kenya Pipeline, we would be receiving a dividend of 5 billion shillings every year. But look at what it is going to do. The maximization of this mature asset is going to do maybe 20, 30 times what the 5 billion shillings would do for us every year. And that is the genius in rearranging and reorganizing our resources in a manner that it works best and we maximize their output and benefit and create much more impact than it currently is creating. Through the National Infrastructure Fund, that value of 5 billion will now be multiplied many times over, delivering infrastructure that will benefit all the people of Kenya. I must confess that I struggle to understand the argument that using infrastructure assets to finance additional infrastructure somehow amounts to selling the family silver. I don't understand how that logic is. On the contrary, it is the responsible stewardship of national assets for national development. Many of you will also be aware that Parliament recently enacted the Government-Owned Enterprises Act. This legislation provides modern legal framework for commercializing government enterprises and ensuring that they operate according to the highest standard of corporate governance. This is what our friends from the banks were telling us. I want to assure you that the National Infrastructure Fund and all the other government-owned enterprises, we have made a decision that these assets will be these parastatals and government agencies will be run on the same principles as the private sector, if not higher. That is our commitment. We have made the decision that these commercially viable agencies and enterprises will not be run by people with political connection. They will not be run by politicians who have not succeeded in their quest. They will not be run by people who have not been subjected to competitive recruitment. This is how we are going to change how Kenya delivers on the most critical and priority programs. This legislation provides a modern, as I said, framework for us to work with the private sector. Institutions such as the Kenya Airports Authority, Kenya Ports Authority, Kenya Railways, KETRACO, the Geothermal Development Company, the National Cereals and Produce Board, will now operate under this framework, among others. Over time, these entities will access capital markets, and the proceeds will allow us to build